Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Today's date is August 16th, 2023. We have seen this currency pair move sharply to the downside over the last month or so of trading with little in the way of upside moves. Technically, we fell below this swing area, this long swing area between the 0.6546 up to 0.6595. A number of different swing lows and highs, and then trading last week, the price traded above and below it, as you can see through here, but then started to rotate back to the downside in the last 1, 2, 3, 4, 5, 6 days below this 61.8, below the low of this swing area. So the sellers remain in control, and in trading yesterday and the day before, actually, the price moved below the low price for 2023 that was reached in May, but we have traded above and below that level as well. That level comes in at 0.64587. Today's low price reached a low level of 0.64272. That was the lowest level going back to this day right here in November 10th, 2023. So it looks like the sellers are firmly in control in this currency pair. Watch 0.64587 level. Let's keep that level in mind in trading today and going forward. If we can move back above that level, then maybe we see further upside potential. One of the things that that may lead to that is if you take a look at the hourly chart. I put an RSI here. Now, normally I don't look at the RSIs, but in this case, what we're seeing here is that the price is making new lows through here, but what we're seeing in the RSI is that we have a higher RSI through here, and so this is a diverging RSI. The RSI moved an oversold condition here and then came down to the 30 level, which is sort of the oversold level there. On the last move to the downside, we did find support pairs against the earlier low for the day. So perhaps there is a reason to take a dip mentality here in this currency pair. However, I would say that if we trade to new session lows, then all bets are off for the time being in this currency pair, because the market has been trending. If the price does rebound as well, we are going to need to get above the blue line that represents the 100-hour moving average at 0.64907. Above that is the 200-hour moving average at 0.6521. So those would be targets on the top side if the price can move higher. Also, remember from the daily chart, getting above the low price from the end of May at 0.64587 would be a target on the going back to the hourly chart. The 587 level is somewhere around this level right here. You get the idea. Right around there. We have been above and below it in the New York session or U.S. session here today. We need to get and stay above that level. As you can see, the current hourly bar is just below that level. So there is some concern about whether or not the market is showing that it can go higher. But get above the 587 level, get above the 100-hour moving average, opens the door to the upside. If the price moves to a new session lows, don't mess around with it. The sellers are still in control. That's a technical look at the Aussie versus US dollar. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.